Welcome guys to our today's question. Today we decided to do a question on tax. It falls on the commercial arithmetic. It's a topic in Form 3. And the question of today is this one. In June of a certain year, an employee's basic salary was Kenya shilling 17,000. The employee was also paid a house allowance of Kenya shillings 6,000, a commuter allowance of Kenya shillings 2,500, and a medical allowance of Kenya shillings 1,800. In July of that year, the employee's basic salary was raised by 2%. Calculate. Question number 1, the employee's basic salary in July, that is 2 marks. And number B, the employee's total taxable income in July of that year, so 2 marks. The question continues. In that year, the taxable income tax rates were as shown in the table below. So monthly taxable income Kenya shillings, percentage rate of tax per shilling up to 9,680, 10%. From 9,681 to 18,800, 15%. From 18,801 to 27,920, 20%. From 27,921 to 37,040, 25%. Then from 37,041 and above, 30%. The question: given that the monthly personal relief was Kenya shillings 1,056 shillings, calculate the net tax paid by the employee. So in this question, start tackling the first question, number A. The first question was, we calculated the employee's basic salary in July. Considering our question was in July of that year, the employee's basic salary was raised by 2%. We are supposed to calculate the basic salary considering that increase. So question number 1, we are looking at the initial salary, or 100% of the salary in June. It was 17,000. You can see there. So we ask ourselves, if 100% was 17,000 Kenya shillings, what about 102%? What amount is this one? And we do cross multiplication. So we multiply 102 times 17,000. We divide it by 100. So this one is, so you pick your calculator and we cross multiply 102 multiplied by 17,000 divided by 100. We realize that the salary was 17,340. 17,340. 17,340 Kenya shillings. This was the basic salary paid to that employee in the month of July. Question number B was, the employees calculated the employee's total taxable income in July of that year. So for us to calculate the total taxable income, so total taxable income is usually calculated by basic salary. You add all allowances plus all allowances. So we add this basic salary that we have here. The basic salary is 17,340 plus any other allowance that this employee was paid during that year. When we look at our question, that he was paid allowances starting with house allowance of 6,000. So house allowance of 6,000, you can see there. So we add the 6,000. The employee was also entitled to a commuter allowance of 2,500. 2,500. So we add 2,500. He was also entitled to a medical allowance of Kenya shillings 1,800. So we add Kenya shillings 1,800. Then you pick your calculator and you get the total 17,340 plus 6,000 plus 2,500 plus 1,800. Then we get the total. So the total taxable income for this employee was supposed to be 27,640. 27,640. So that is the total taxable income for this employee in July. Then we go to question number last one. C, given that the monthly personal relief was 1,056 Kenya shillings, we are supposed to calculate the net tax paid by the employee. So when we are calculating the net tax paid, we usually use the total taxable income, and this is the amount that gives us a clue on where we are getting the tax deducted from. For example, we have several bands here up to 37,041. But if you look at our total taxable income, it is not going up to that point. Sorry. So in this case, we look at where our total taxable income reaches in our tax bands shown below in this table or above this table. So we start with the first band. So we pick 9680 multiplied by this rate is given as a percentage rate. So we multiplied by 10 over 100 and we get that one. So 9,680 multiplied by 10%, we get 968. 968. So we write there 968. We go to our second band. Our second band, we usually get it by picking 18,800 minus 9,680. So we pick this one, we minus from that one. So we pick 18,800 minus 9680. So with that, we did with our calculator, 18,800 minus 9,680. We are getting 9,120. So we get 9,120. We multiplied by this rate. We multiplied by 15 over 100. Multiplied by 15 over 100 to get 1368 or 1,368. 1,000 get 1,368. The third band, a question on the third band, we usually pick because it is we are having our total taxable income is 27,640. So we pick this total taxable income because it lies in this band. So we pick 27,640 minus this amount, 18,800 minus 18,800. Then we multiply by the rate now. So we have 27,640 minus 18,800. So you get 8,840. We get 8,840. So we multiply it by 20%. 20%. multiplied by 20 over 100. Then we get 1,768. Get 1,768. Then we add our tax. So we add the first tax band gave us this one, the second gave us this one, and the third one gave us that one. So we add plus 1,368 plus 968. We get 4,104. So this is the tax that this person was supposed to pay. But we have a question here saying that given that the monthly personal relief was 1,056 Kenya shillings, we are supposed to calculate the net tax paid by the employee. So we usually deduct the relief because the relief is a personal relief that is supposed to be deducted from the tax that a person is supposed to pay. So in this case, we are supposed to deduct 1,056 Kenya shillings from this tax, and we see what we are getting. So we minus to get the net tax. So minus 1,056 Kenya shillings, we get 3,048 Kenya shillings. This was the tax. This was the net tax. Net tax that this employee paid during that month. So that is how we tackle questions on tax. We shall be doing more questions. Thank you for watching. Remember to subscribe to this channel. You click the notification bell to get more and more videos that are coming from our channel. Thank you.